Welcome to another S&P 500 analysis. Today is November 28, 2020. For a shortened week due to Thanksgiving, the S&P 500 managed to close at another new all-time closing high on Friday. On Tuesday, all the major market indexes except the Nasdaq 100 and the Nasdaq Composite closed at a new closing high. Then on Friday, the S&P 500 along with the Nasdaq Composite and the Russell 2000 closed at another new closing high. But the Dow Jones Transportation, the Dow Jones Industrial, and the tech-heavy Nasdaq 100 did not close with a new closing high. In this video, we will analyze the price action of the S&P 500, review the market sentiment, and its internal to see whether if the S&P 500 and the rest of the market is starting to top out. Stay tuned. Before we begin, if you are new to this channel and have not subscribed to this channel, click on the subscribe button and subscribe. Also, be sure to smash that thumbs up button to help me promote this video on YouTube. It will help me grow this channel. Thank you for your support. Looking at this monthly chart of the S&P 500, you see the S&P 500 made a new all-time high and a closing high in the month of November. The monthly candle is one huge bullish candle with hardly any downside wick, and the price is sitting near the high of the month. And from the weekly chart of the S&P 500, we see the S&P 500 close at a new closing high but did not make a new intraday all-time high. And the price remained above this long-term megaphone channel. For the week, the S&P 500 had a range of 91.5 points and closed up 80.81 point or 2.27%. The 10-week moving average and the 40-week moving average continue to move higher, and the price is still in a one-time framing up. On a weekly basis, the trend remains to be up. Before we continue to analyze the S&P 500 and the other major market indexes to see if the market is starting to top out or not, let's go take a look at what the market sentiment and the market internal are telling us about the state of the market. Starting with the sentiment chart, we see the VIX is still hovering inside its 20 and 30 zone area and getting close to dipping below the 20 mark. The put-call ratio got a low of 0.36 on Wednesday and a 0.125 on Friday, a shortened session. This is unbelievable. I won't read too much into this reading since it is a shortened session, but if next week we see a put-call ratio of below 0.3, then I will be looking to either hedge or close my long position because the reading under 0.3, the market is getting too bullish and the market is likely to reverse or have some sort of pullback. These two sentiment indicators are telling me that the market participants are getting close to a euphoric stage of bullishness. And the New York Stock Exchange up-down volume ratio was negative on Friday as the S&P 500 closed at a new closing high. The advance outpaced the decline by only 318. These two market internals showing the S&P 500 could be getting a bit tired. And throughout the week, the New York Stock Exchange new 52-week high outnumbered the new 52-week low. But on Friday, with the S&P 500 closed at a new closing high, there were only 191 more new high than new low, versus on Tuesday, when it closed at a new closing high, there were 291 more new high than new low. So the latest new high, new closing high was made with less number of new highs over new low. But also it was under a shortened session, so I wouldn't read too much into this. On the New York Stock Exchange cumulative AD line, it is showing a small negative divergence. It made a lower high on Friday while the S&P 500 closed with a new closing high. It is just a minor, slight below this peak here. As you can see, this right here is 23,845, and on Friday it was 23,745. Looking at the Nasdaq up-down volume ratio, we saw it was positive throughout the week, but the advance decline was a -9 on Wednesday when the Nasdaq 100 closed with a new closing high. That's possibly a sign of a little bit of an exhaustion. The Nasdaq new high continued to outnumber the new low throughout the week. And the Nasdaq cumulative advance decline line surged to a new high while the Nasdaq 100 is below its all-time high. So that's a positive. Now let's go take a look at the price action of the S&P 500 and the major market indexes and see what are some of the possible price action scenario for the coming week. Looking at this daily chart of the S&P 500, you can see that it is holding above this pennant and forming a small rising price channel, or it could look upon as a ascending triangle as well. If the S&P 500 break above this 3645.99, then I'd be watching for the move toward the 3270. This level here, this level is basically the 127 extension of a Fibonacci retracement on the swing from the February high to the March low. And if the S&P 500 move above this level, then I will be looking at the possible major move from this little bit of a bull flag. And if we take a look at this right here, essentially this little bull flag that I'm talking about here, 618 will be this 3,831.11, and then the near the 80% level will be up above this 3,900. And if we take a look at this 100% major move, that will put this up close to the 4,000 level for the S&P 500. Let's drill down to the 60-minute chart and take a look at some of the possible price action scenario for the coming week. Last week, I was basically looking for this to pull back into this zone and possibly come down and fill this gap here near the 3450. And that is not likely going to happen this week. So what I'll be looking for this week is possibly pull back to this 3588 level and fill this particular gap and maybe get down to this lower trend line of this price channel and back test it for a bounce. And the worst case is come down to maybe this 38.2 somewhere near the 3500 level and get a bounce. So we're essentially setting up a nice balance area for this thing to consolidate and then push up. So on the upside, I'll be looking for this thing to come up to this 3650 and maybe get a little bit of a resistance from this trend line here on the upper channel, and then back test the 3645, then push up to the 3720. And if it could get above the 3720 level, then I'd be looking for to move up toward the 3800 level, this 618, or possibly to the 80% level above the 3876. So that could be a little bit maybe in the coming weeks, but probably not next week. But anything could happen, right? So we keep that in the back of our mind just in case. But the 3700, that is a likely possibility. So we're going to be keeping an eye on that on the upside. And then on the downside, like I said, we're basically looking for this 3588 to somewhere around this 3550 area. Wouldn't be surprised to come down and check this pivot high here. Once again, essentially just back test that and see could we get a bounce off of that if the S&P 500 decides to pull back next week. Now let's take a look at the other major market indexes, starting off with the Nasdaq 100. We see the Nasdaq 100 did not make a new all-time high, but nevertheless, it broke out of this balance area, and we could project some potential target beyond the all-time high using this huge, this huge bull flag. But that's a little bit unrealistic. I think the more realistic projection is probably using this particular range here and essentially just project that to a 1x and get some idea where the possible potential target is on the upside. So if we take a look at that, essentially you could look at it as a ascending triangle, right? With this this as the ascending trend line here, and here's the base of that triangle. Then you basically just project that back up from this breakout point near 12,440, and you can see that the 618 extension is somewhere around 13,516, and near the 80% mark, that's close to 13,800, and then the 100% major move is above the 14,181. So those are some of the potential upside target if we use this range to project a 1x. And on the downside, if it pulls back, then we basically are looking for this thing to come down to maybe possibly to this trend line and also get into this zone and fill out this gap here down at the 11,356. And worst case is come back down to this 10,677 and essentially forming this balance area here. Right, so we could conceivably see that on the downside. For the Dow Jones Industrial, it made a new all-time high last week, and it is holding above this recent breakout from this pullback channel here, and it's forming a ascending channel right now. So for next week, the upside scenario, I will be looking for a breakout above this channel here and possibly get up to the 31,000 area. And the downside scenario is for it to pull back to this channel and somewhere around this 29,296 area and fill this gap here near the 29,551. And the worst case scenario is for it to pull back to this, back test this particular channel trend line here and near the 38.2, this retracement zone, the Fibonacci retracement zone, somewhere around 28,600 area. And the Dow Jones Transportation continued to make new high, and it is a bit extended. I will be looking for a possible pullback at least to this area here to fill this gap near the 12,379 and possibly even come down to this 12,096 and fill this gap here. Then on the upside, it's basically just continue to move up and try to get up to this 13,000 area and move toward the upper trend line of this channel. The Russell 2000 continues quest on making new high. It came up to this channel upper trend line. So the upside scenario is basically just hugging this trend line toward the 1900. In the downside scenario, I'd be looking forward to possibly come back down and retest this old prior all-time high that was put in 2018, this 1742. Then worst case is come down to this Fibonacci 50% retracement near the 1698.90. So in summary, we saw the market participant sentiment are getting near overly bullish level. So this should throw some caution in the wind. But the New York Stock Exchange and the Nasdaq cumulative AD line are still showing strength to support these markets to move higher. Although we are seeing some extended move from the market indexes, but the recent breakout from the indexes does not show they have made a top yet. So for me, I wouldn't be surprised to see a spike up in the near term from the indexes to a new high into the end of the year. But with that said, we cannot let the guard down by not paying attention to the possible pullback move. For me, I would be very cautious on initiating shorts here, but will milk any long position I have as much as I can until the market shows signs of exhaustion. Don't forget to smash that thumbs up to help me promote this video on YouTube. Thank you for watching and stay safe.